For the Chinese market, I think the government has adopted very hard policies. Do not allow short selling, and a lot of activities basically has been inclined towards buying activities. So if we let the market have free free fall or whatever free movement, basically we see more significant downside for the Chinese market. But still, a lot of figures has not been coming up, and we are not certain about whether the Chinese government can contain the virus in a short period of time. That may happen. If that really happens, we can see a very significant rebound in the market. But that is based on a lot of uncertainty. We still need to be very cautious about that.
And Ronald, it's Nancy here in Singapore, and it just makes me wonder in terms of the steps that authorities are taking so far with stimulus measures, with the central bank injecting even more liquidity into the market. Will it work this time?
I think the market sentiment for the time being in China has been really weak because we still have to observe the market and the business activities in the next 2 weeks, because factories and a lot of shops has not restored back to normal. A lot of workers, a lot of salarymen has not returned to the companies to regain and to restore their normal operations. I think we need to be really cautious about the stimulative measures, whether those measures can work on this time. But first steps, the government trying to take is to inject liquidity into the market. This is essential to the market and also essential to a lot of SMEs. Basically, I think they try to stabilize the market for the time being. But next step, I think more measures need to restore, how to help the enterprises, how to restore the business and retail, even traveling, transportation. Every sector needs to be supported.
Yes, Ronald, and given that the consumer side of the Chinese economy is a much bigger contributor to overall GDP than it was back in 2003 during the SARS case, does that concern you? Are we potentially looking at a much bigger impact from this coronavirus because of that consumption side?
Yeah, I think the coronavirus has caused people staying at home. They don't go outside to shop, and basically they use internet for e-commerce. A lot of shopping has been done on the internet. So we see the share price of a lot of relevant companies like Tencent has been doing well. Alibaba is doing well as well. But the significant contraction in domestic consumption is happening. I think that will cause a very damaging impact on the Chinese economic policy as well. At the same time, we shall see a significant jump in the inflation environment in mainland China as well, because a lot of manufacturing activity has come to a standstill. Even the agricultural farming. I think the jump in prices will cause a very significant concern to the investors and to the people and all the citizens in mainland China.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.